let's give it a few minutes and let everybody join in. Typically, we got some late bloomers.
Sounds good.
Parker, Kevin was telling me you guys got a nice app and things that you work with the realtors. So I'm working with my teammate Dan. We'll build like a landing page or maybe even a button. You guys, if you want to add, that way they can push it to their customers, or the agent can put some property information in, and we'll get notification as soon as they send it in.
Well,
Reach out to them and get to work. So
let me show you. I'll show you. So I'll share my screen.
okay.
I'll show you what we have. It's a program which is called Circle, and it's kind of quasi company intranet, but it serves our purposes pretty well. And let me go ahead and let me do a screen share for you here so I can show you what it is. And I'll show you kind of an agents. If you're tuning in, you can kind of see what I'm looking at here. So can you see thumbs up? Can you see that?
Yep.
Yeah. So this is the domain realty in a company like virtual office. And so agents, they can it works kind of like it's like Facebook. It's just it covers it covers a lot of things, but so for example, I put a poll in here, and I pinned it to the top of this thread. But each one of these rooms is kind of like a digital room where people can talk and discuss things. But if you see up here, there's our links. So just so you guys know, you guys are one of our preferred vendors. So we've got all of our preferred vendors here. East and Greenwell, you guys are in there. We got another option for agents. So you guys are one of our preferred vendors. But the other thing though, which I think is cool, is you got these quick links. And just so you know, there's an app, there's like a phone app which has complete functionality. So it's basically you can just take the entire real estate office on your phone. So everything is at your fingertips. And so over here you see these links. So we've got a mortgage calculator, and this mortgage calculator is a quick link to our preferred mortgage vendor. So, hey, if you guys got something like that, I can kind of install that on here.
Yeah.
And
We can get something pretty similar to that. At least gets them an opportunity. It may be easier just for agents to drop us an email, say, "Hey, call this person for me," but we'll give you a tool that
yeah, I
if
mean, it's
it's
just,
if they find it helpful, they can use it. So
there's only so much technology that you can add. But it's nice just to make it easy. But so this is how we're rolling for now. And
cool. It's nice.
so yeah, it's pretty cool. So like this for example, this upcoming event, this is a Zoom event that I created. So if you're an agent, it's pretty easy to just join the event from there. So it's all just about just taking everything and sticking it in one place.
Yeah, nice little dashboard.
Yeah, it's pretty cool. So looks like we got some nice I'm gonna say hello to everybody. Hello, everyone. And what I can do. So who wants to be are you guys, Nate, Kevin, are you guys gonna be doing any screen shares?
Did you get? I'm getting a little bit of feedback.
Yeah, I don't know if that's me as well. Got a good beat, though.
How about this? Is this better?
There you go. That was good.
Okay.
I was waiting for the drum kick.
Club domain. All
Uh,
right.
I have a presentation or a PowerPoint I can throw up if people want to follow through, but we can
Yeah,
easily just talk depending on how many people are here as
so
well.
yeah, let me do a little quick introduction here for everybody. I guess we got some pretty nice participation this morning. I got a lot of people here on the Zoom call, which is fantastic. So insurance has been kind of the thorn in the side of the residential real estate industry now for the past few years. There's a lot of myths uh, that have perpetrated in the news, and it's our job as real estate agents to educate people and to educate ourselves so that people make sound financial decisions. So, for example, I remember years ago, I haven't been in the field in a couple of years, but one of the biggest fallacies that people make from up north is that they assume that they have to pay homeowners insurance on condos. So they automatically tack on like $300 or $400 per month to their HOA fees. And it's like, no, your homeowners insurance is included with those fees. If you want to get contents insurance and flood insurance, that's a different story. And that's something that you can talk to. And every lender is going to require you to carry some sort of contents insurance if you have a mortgage on the property. But on top of that, there's a lot of changes that have happened. And so we're very fortunate to have two of well, actually, one of the top real insurance firms in the area help our clients. And they've been my go-to guys really for the past, ever since I moved back to Naples back in 2011. I don't think I've ever written, they have my insurance. So this is East and Greenwell from Allstate. And so that being said, I'm going to go ahead and should I just make Nate the co-host so he can
Well, yeah, I just before we do that, I just wanted to say, I mean, we really appreciate, the partnership. I mean, we've worked with Domain. I was trying to look back and see how many years it was. And I know I didn't have gray hair at the time, but I couldn't determine exactly what year we started. But I did find an email that I sent to Jesse, October 7th of 2022, which was right after Ian. And talking about how we can help your clients and how most of the companies are still closed for business, and how difficult the underwriting was going to be, and just how disruptive the market was then. I mean, it was a crisis. I mean, especially Lee County. I think Lee County at that point was the worst county probably to write insurance business in the state of Florida in 2022, and really all of 2023 is very difficult. And so, I think what's important to know about today's conversation is, one, the market from our perspective is the best it's been really going back to probably pre-Irma days. Obviously, pricing is never going to go back to that point. I mean, after COVID, everything's gone up. But if you look at the market right now, we've had multiple companies go public this year, which is a big deal. Regional Florida carriers going public on the stock exchange. We've got more carriers. There's more flexibility with coverage. There's more capacity. Companies actually want to grow the business in Florida. They're looking to grow. They're lowering rates. We've seen almost every major carrier file for rate decreases. I've never seen that in my entire career as far as filing for rate decreases. And a lot of that has to do with legislative changes, which I'm going to let Nate kind of speak to. But I think we're really aligned with Domain from the standpoint as we look at it as a relationship and not just transaction. We're not just trying to sell customers policies, and when something happens, we're nowhere to be found. We're in the grocery store. We live in these neighborhoods with your customers. And so when something happens, we're there. We can help the customer. We educate them. We make sure they have the right coverage, and we make you look good in the process. And I think, Parker mentioned people not understanding insurance, especially the people that are buying a second home or moving down from somewhere else. Florida is the most unique insurance market in the country, and anybody moving from anywhere else, even if they have familiarity with insurance, Florida's different. And so we help make you look good. We help educate the customer. We help get the deal closed, but it's not just helping get the deal closed. It's what happens after the fact if somebody doesn't. So Nate Touche's been with us for 12 years. He runs our sales team. He's an expert in the market. He deals with folks just like you every single day, helping customers. Our team's helping customers. And so the earlier we can be involved in the process, the better you're going to look as far as the, setting the right expectations. And I'll let Nate kind of take over from there.
Yeah, appreciate you, Kevin. I mean, that sums it up right there. I mean, at the end of the day, our goal is to partner up with you guys, help your clients get to closing and create a relationship, because we've all seen over the last 3, 4 years, but particularly over the last 12 years of doing this, it's that repeat offender we're looking for. People buy a condo, then they decide we're coming to Florida full time, then they want to buy a house. They bought in this neighborhood, but they like that neighborhood better. We want those customers continually coming back to you guys, looking for the sale and the purchase of the next one. So, yeah, Parker, I can throw up a couple of slides if you want. Walk through.
Yeah, you have the floor, my friend.
You got me.
A co-host, so you have the comp.
Awesome. Let's come up here and throw this up here then. Give me 1 second as I put this in. Move a few things around here.
Look, that looks good. I can see it.
There you go. You got that?
Yeah.
Beautiful. Yeah, I think the couple things to nail on and that Kevin started to hint on was that this has probably been the best environment for the real estate market since Irma. There's a huge explosion of activity, us staring down the barrel of trying to figure out how to get deals closed for you guys with limited to no options at points. And so the biggest thing that we can do is, because we're always kind of the caboose to the train, is be brought into the equation early on so that we can help everything be really smooth, not only for your customer and the client that you're working with, but for you guys as well. So, we talk about early collaboration helps us prevent all those hurdles that come in at the last minute. If that's I had somebody call me this morning, hey, I'm on the way to a showing. Can you take a look at it real quick and give me some ideas? And I said, yeah, hey, make sure you get these inspections, double check X, Y, and Z water heaters or roofs, or get some details on this from the buyer. We can give you some of those things to think about, so you don't have to be an expert on everything. You can team up and have some experts support you along the way. So we're always a big fan to be involved early on. Anything you're working with, even if you're just going to look at a property to maybe take on the listing, we want to be helpful for you guys on what you need to consider or what your client will need to consider as it comes into the sale or the purchase of that. So really helps us kind of evaluate the pre-underwriting issues, the hurdles that we're going to run into for properties. It's getting better. I would probably say in end of 24 and 25, those things that would snag us up, and as you guys have seen, would blow up deals. If that was flood, if that was homeowners, if that was mitigation factors that needed to be made, we can jump on those really, really early on. And it's unique. We'll talk a little bit more about it in detail, but we were kind of laughing about it in the office the other day. We could take one property and quote 5 different people on that one property for you, and we'll probably end up with 5 different results because it's become so specific on their loss history, the property's loss history, locations from the coast, mitigation factors have been applied. So the days of like when Kevin and I first started, you guys would call us and say, hey, give us a quote on this. We wouldn't even quote it. We could probably get within $100 just based on looking at the Zillow listing, where today, it's a much more in-depth process that we want to try to partner or take off your plates and work with your customers on. So, Parker was mentioning it earlier, helping them put that whole budget together so they can plan on if it's going to be a rental, if it's going to be a seasonal, if it's a condo, a home. They know what kind of dollars and cents are going to be involved in this, so that they can decide what is the right property, especially if they're looking at 2 or 3 that they like a lot. They're trying to pick between which one's the best. Sometimes the insurance can make all the difference there. So really the market shifting, the kind of the then versus now. I used kind of that Irma to Ian example of what we are really running into. You guys have all seen it or heard it at one point, but from the insurance perspective, it was really the litigation abuse. It was the door knockers. It was the insurance companies getting hammered so bad that they just said, "Hey, we're going to sit back for right now." Yeah,
To give you an idea how bad it was, there was an insurance company that we spoke with that told us they were getting more claims 18 months after Ian than they were 6 months after Ian. So that's the abuse was just incredible, and that's why companies couldn't make any money, and pricing and capacity was just completely out of control because the roofers, knocking on the doors, having people sign assignment of benefits, and so that all has been uh, corrected at this point, and that's very, very bullish for the long-term health of the
Yeah, 100%. I mean, it goes just to the stats I popped up from some articles that I have found over the years. But I thought was interesting after 2019, Florida represented 8% of the total filed claims in the United States, but we represented 76% of the litigation. Just kind of point to some of that abuse.
Wow.
3 years after that, the numbers are still high. Now we represent 15% of the claims filed, but we're still 70+% of the litigation that's being filed. So it was just abuse on abuse after abuse. It was the door knocker. It was, at that point post Irma, there was a 3-year window. So there were people coming in. Kevin and I were talking with other teammates. There was a 3-year mark at that point that you had 3 years to file a claim. And we had this explosion of claims being filed basically the last 45 days of that window because their neighbor got a roof, the guy down the street got a roof. They think they should get a roof. They might not have had any damage. They might not have any leaking, but they wanted to get that new roof. So that was really the precedent that kind of exploded everything. That drives up the reinsurance markets. That puts carriers to kind of coil themselves and pick up their ball and go home. Essentially, say we're not going to play this right now. It's too difficult to be able to pay a claim when we can't really figure out what the costs are going to be, because insurance companies, actuaries, they can get claims down to $1 million, which is nothing for them. We know exactly what we're going to face when a storm hits, but what they couldn't do is figure out how much was the abuse going to cost us. An example that I always give, and I'll cut out all the detail to make it short for you guys, but there was a claim in the Panhandle. It was with Citizens, actually. Citizens agreed to pay $20,000 on a shingle roof. The homeowner didn't think it was appropriate, hires a lawyer, goes through litigation. They end up getting paid. I think the final payment for the client was $28,000. So they picked up an extra $8,000. But at that time, there wasn't restrictions put on the lawyers at that time. One-way attorney fees, there was multipliers put on it. Citizens ended up writing a check for $500,000 to the lawyer to be able to replace a probably $25,000 shingle roof. So
and the worst part is the customers don't even see what these attorneys get paid. Nobody, it's all behind the scenes. So it's like the customer thinks, oh, I got 28,000. This was a great deal for me. And then $500,000 goes out, and then everybody's insurance premiums go up 30% in the state of Florida because of that abuse. If you multiply that out, my neighbor across the street, who's a personal injury attorney, is also a senator.
Do that.
He basically, even though he's a personal injury attorney, he voted for these legislative changes because even he acknowledged just how bad the environment was. And so, the environment obviously in Florida was so bad that you even had attorneys, finally step up and vote these measures through, which are really going to change the market, moving forward.
Yeah, I mean, that was a 2023 legislation. And even by the end of 2023, we had carriers coming in and saying, hey, 60 to 70% of our claims early in Q1 represented with litigation towards the end of just that year. So they hadn't even sat in for 6 months yet. They were already down to the 20 and 30% rate because the legislation, without getting into the House bills too much, puts a lot of pressure on the insurance company, puts a lot of pressure on the homeowner, and it puts a lot of pressure on litigation so that everyone's not just jumping the shark looking to litigate for over claims, but there's arbitration, there's expectations from the insurance companies to communicate within a specific time period within a claim to resolve claims. So it's been a great scenario. And I don't have data to it, but from what I was reading in a couple of these different insurance journals, Florida was like last to the boat to get this done. States from all over had been incorporating some measures to this to make sure that at the end of the day, the homeowner's protected, the insurance companies are protected, because those are the two most important people: the ability to pay the claims and the ability to buy those policies. So they kind of tried to cut out the litigator and the roofers who were buying football stadiums at that time from just being able to knock on the door. So some kind of key buzzwords after that legislation's passed from a few different articles: lawsuits fall, market shows improvement, benefiting consumers, rate reductions. These are all things that have been hot talking points, not just in these four examples, but example after example for the last 2 years. So from my perspective, what that's done is created a competitive environment, not necessarily just from a rate specific scenario. Kevin did mention that we're starting to see some decreases, which is nice, but it brought new carriers to the table. It brought carriers that had picked up their ball and gone home, come back, and they're going to start to compete on two different ways. They're offering more capacity, which gives us options in the marketplace. They may have to compete on offering better bells and whistles. We actually have a carrier we met with earlier this week that has added coverage back into their policy. They made it better for the consumer. So, I don't know of too many environments where they say, hey, we're going to make the product cheaper and we're going to make it a higher quality product. That's just kind of an indication of where the market's going and what carriers are going to try to do to grab some market share and be supportive within our communities. So all really good signs going forward. I know the question always is like, what's the insurance costs? I did a quick calculation from Marco Island to Tampa to kind of show you what's happened to rates. I have 3 examples that were given to me as well to kind of show you more specific local type ideas. But the general feel is you'll see as you kind of look from the 2022, from the condo, the single family home, or the waterfront to those 2025 rates, there's definitely improvement. It's never going to go back to the Kevin, we sell policies for like $750 in the Estero, single family homes. You just line them up and write them off type of thing. That's unrealistic. Probably why we saw so many rate increases as well, to try to keep up with things. But I think that the leveling of the marketplace will be there. Consistent rates will be there. We won't see these teens, 20% increases year after year because of the abuse and the reinsurance costs. So things are definitely improving in that area. Specifically, some snapshots that were given to me. Here was a condo in Naples, just shy of 1,100 square feet. I think it was a 92 condo, a couple improvements made to it, which is great. We have a couple different rates, which I'll show you. And this is actually a screenshot of what we can share with you guys to kind of give a 30,000 foot view. But along the bottom, you'll see we have some rates between $2,300 and $3,200. And these are representing kind of all the bells and whistles. So conversations we'll end up having with people is, hey, if premiums aren't a concern and protection is the most important, here's what we need to look at. This is what you'll have as options. You can take on a little bit more risk. Maybe if that's depreciation on contents or reducing contents limits, and just look for key areas where it maybe makes sense to save a little bit on premium. So these are all going to represent some of the higher levels of the numbers. Again, that was a condo in Naples right off Pine Ridge Road. Here's a single family home in Naples, actually in my community. If you're ever looking for a great holiday experience, Victoria Park's the way to go. This would be a 83 home roughly. I think it was 1,900 square feet. Obviously from the photo, you can see it's been renovated really nicely. We're looking at rates between 5 and 11. That's a huge range, obviously, but you'll see from the bottom here, multiple carriers are coming in and giving options, again, for all the bells and whistles. A year ago, maybe early 2024, we were lucky to get one option. That was kind of the old Model T. You can have any color you want as long as you get the black one. That's kind of the way the insurance looked like. It was like, well, here's Citizens and here's one other option potentially. So more options are on the table for us to work through. Newer construction, 2020 build. This is in the Connors, kind of North Naples area. Beautiful home, obviously, 5.3 almost. Looking at the different rate options, I think the thing that I was most impressed, especially in the Connors area, is the number of options that we had available to us. This would normally be excess and surplus markets. It's like, hey, nobody wants to play this game, so we're going to have to go to one-off type companies to find options. Looking at $2 million of dwelling coverage with all the bells and whistles with
Yeah, high
wind.
value. This is so important. High value basically went away completely. You could do excess and surplus, you know, 10% hurricane deductible, which, that's a lot of people aren't looking for a $500,000 hurricane deductible. Basically you're self-insured at that point. So the amount of options now is just, I mean, it's so different than it was a couple of years ago.
Yeah, yeah, 100%. I mean, you were hamstrung on what you could do. 10% deductibles, no coverage on anything else, and they would cover you if the storm was on Tuesday. Any other day of the week, you were out of luck, essentially. So some really good fits and opportunities in the marketplace to find. Now, I know majority of Domain, you guys a little bit sneak up into the Charlotte area, but Lee and Collier County, it's probably one of the most aggressive areas for insurance right now. And an example of that would be the amount of insurance agents we see marketing in our area that are from Miami, Tampa, Jacksonville, Orlando. That's a good sign that everyone's seeing that this is a great spot to be able to help clients out and get some property insurance from a business perspective, write that, but for you guys, get those closings done. And really, this is some of the hot areas for the last 5 years. People are buying properties sight unseen, during COVID. So people want to be in Southwest Florida. They want access to those beaches and the lifestyle that we have here. So we already kind of hit this up, but the stabilizing of the rates and what's bringing it down, I would say number one is the legislation reform. There were some people that were against it early on, but once everybody saw that it wasn't just letting the insurance companies off the hook with finger quotes, but it was putting pressure on hey, you still have the right to sue your insurance company, but if you lose as a homeowner, you're going to be responsible for that bill. You can't just pass it off to the insurance company. That stopped a lot of these door knockers from happening. It allowed the attention to be placed on the people that needed the support. And Irma to Ian from an insurance perspective, I always said Irma was a storm of inconvenience. Ian was a storm of catastrophic loss. And it was a horrible experience for the people that flooded or did have those wind events. But from supporting them in those environments, in those different situations, it was a night and day difference for the agency. Being able to communicate to the insurance company, getting checks into people's hands, connecting with people to support them. It was unbelievable. I never really want to go through another claim like that again. But if I had to choose those two different scenarios, Ian would be the way I want to support our customers, because it was the first time that I actually was like real proud of what we did on a daily basis. I was proud to represent these different carriers that were taking care of their homeowners. Completely different experience. It was great. So I think litigation's huge. The reinsurance marketplace, that's going to trickle into them. They're less fearful of just losing money. It is a money game for them. So they're allowed to buy more coverage. Reinsurance, for those that aren't overly comfortable with it, great example of what it is. It's like buying deli meat. Insurance company buys a pound of deli meat, and if they don't use it, they lose it. So they're super hyper focused on figuring out the market saturation and how they want to grow. And they're buying 2 or 3 rounds of reinsurance just this year alone. And that's a really good sign of their appetite, that they're looking to continually add in some protection measures so that they can expand and have some more market share and options for consumers. And then I think too, strong underwriting. It used to be you could fit a square peg through a round hole. You could get anything insured. Well, now it's like, you guys have probably run into it that are on here. There's questions about the water heater. There's questions about plumbing, loss history, roofs is going to always be a hot topic. But even that has loosened quite a bit in terms of the restrictions being placed on there, more on the age of it than anything. And then I think homeowners kind of taken a lot of new homeowners into our marketplace, a lot of homeowners reinvesting in their property, bringing in these mitigation factors that are helping add credits and discounts to the policy. Earlier, I kind of mentioned that you could have one property and 5 different people with 5 different rates. And that's going to be because everybody's going to have a little bit different style. You have some people that are afraid to take a step, and other people that just want to insure for those catastrophic events. So coverage levels, deductibles are always going to play a factor in why one person's rate is different than another's. Their claims history, their credit profile, we call it more of like an insurance scoring that they'll go through. They compile everything based on ownership, where they own, loss histories, roof types and ages. I know that's always a question. I'll open it up on the end if you guys want to ask questions on that. I'm more than happy. Message me. I'll take you out for coffee. We could talk individually. I'd love to meet everybody as well. Flood zones, obviously, huge conversation all the time with the new mapping. My community's in, my community's out. The seller has a policy. They don't have a policy. Those are all important things. And then policy types, obviously a little insurance speak, but single family to condos to a rental exposure to more comprehensive policies, just trying to figure out what's the right fit for each individual. And then really our goal is to partner with you. I've had over the years doing this for 12 years with Kevin, we'll have the agents that, and I appreciate what they're trying to do. I'm going to say this selfishly, hey, get me a quote on this person and let me know. And it's like, I can give you a 30,000 foot quote, but I can't promise anything versus I have lots of clients now, real estate agents that will call and say, hey, here's my property. Here's the person's phone number. Keep me posted. And I'm keeping them along the scenario of, hey, I heard you guys have inspections in 2 days. Make sure you get that wind mitigation at 4-point. And next thing you know is I'm sending over proof of insurance. Hey, your customer's all taken care of. You're clear for closing on the insurance end. That's the best way to get the job done, because when I say we're really trying to partner with you to make you guys look good, we want you to be able to just have those resources that you can be confident in and rely on. We want to earn that trust with you guys, but that you can literally just turn your client over and know that everything's getting taken behind the scenes. And if something pops up, we engage you guys in it. It's like, hey, we're having a problem with X, Y, and Z. I ran into it last week with some flood information. I said, I can't get a hold of the seller. Can you work with that other agent? Figured it out about 6-7 hours later, got them to close in that next week, which was great. So I always kind of say we're like the insurance translators. It's a foreign language. Even if you felt like you knew insurance from 5, 6, 7 years ago, it's completely different world now with these different options with roof deductibles or payment schedules to new endorsements and line items that can be brought in. We just kind of want to make sense of it so that you're not looking at a declaration page with 70 different coverages on it and you don't know what's the important stuff. Not only help you, but help your customer figure out what's the right fit for them to get to closing. I mean, that's the number one goal for you guys. How do we get you guys to closing? Put more deals together and have less blow up on the back end. And then Kevin mentioned earlier, despite the media, still to this day, I saw one maybe a month ago talking about how it's just crazy here. You can always find that one example, but I will say this is the best insurance marketplace. I've been in the insurance world 2 different careers. This last one, the last 12. My first one is in the 05, 06 time period. And I'll tell you, this is the best marketplace we've been in. I think the housing marketplace is going to take off again for you guys. I think that interest rates and mortgage companies are going to get busy again. We're always insulated. We have a nice little bubble down here, but I think you guys have been patient, working hard, taking those deals down when you can. But I think it's going to come back, and you guys are going to be happy with the activity that's coming down here. So we're here to help you out with those inspection reports. If I know you guys as Domain have Dwight, he's great. We work with him quite a bit as well. Which ones to get, why to get things. He's really good resource for that as well. But we can help from the insurance aspect of it, flood insurance options, and just collaborating with you guys of how to be successful, not only as an overall Domain organization, but you guys as individuals. So I get it. At the end of the day, you're all small businesses. You take care of what you're doing, your branding and marketing yourselves. We want to give you tools and resources and people to help you be successful on a daily basis. So that's us kind of in a nutshell. I try to keep it short and simple, but with some good stuff. There's always a million questions. Parker, I don't know how long you guys want to go to today, but we can stay all afternoon if you want. Or like I said, I'd be happy to meet with you guys individually or in smaller groups and help out, specific scenarios or concerns you run into. So.
Mhm.
We can't hear Parker. I do see a question
And
about 25. I do see a question
yes.
made on 25-year-old tile roofs.
Jump over here. So 25-year-old tile roofs. The nice thing now, I would say in the marketplace in the last 12 months is we can find some options. So one of the legislative changes that has been granted towards the insurance companies is they're able to give more flexibility in the insurance, where it used to be, I won't bore you guys, but it used to be you could have a 30-year-old tile roof. And the way that our legislation allowed insurance to work is it had to be a replacement evaluation. So you could just, pray that your roof doesn't leak until the storm happens, and then you're going to get a brand new roof. Well, now that allows them to do with these changes is it's more like the other 49 states, where as a homeowner, there's an element of responsibility that you have to take into a roof. You can't have a 50-year-old shingle roof and expect there not to be a problem. We can do roof schedules, for lack of better words, offers a depreciation schedule on the roofs, or we can do what's called, there's a few carriers, and I think this is ingenious. They do something called the stated roof value. So on the declaration page, it will say, hey, we will allow you to, we will insure your 25-year-old shingle roof, and we will agree at the time of loss to pay you $15,000, whatever this, we'll agree to pay you $20,000. And what that allows us to do is, where a year ago we would say, unfortunately, no, you have to have a 15-year or newer shingle roof. There were companies that were saying, just to control their underwriting, they would say you have to have a 5-year or newer roof. Well, now those boundaries have been expanded because we can offer these, hey, we'll partner with you. We'll depreciate at that time of a loss, or we'll cover a specific amount in those hurricane losses so that they can take on those risks, because there's a lot of 25-plus-year-old tile roofs out there that are in great shape right now, and they were getting cut out because of just, the 80-20 rule.
And if you just think about the abuse that happens on an older roof, right? I mean, somebody basically, their intent is just to wait for a storm and then file a claim. So if they can put a schedule on it, it's kind of like if you look at an auto policy, right? If you've got a BMW that's 10 years old and you go out and wreck it, you don't end up with a brand new BMW. You actually end up better off because you wrecked your car. And that's kind of what was happening with roofs. Like if I've got a 20-year-old roof, I'm better off if I get a brand new roof. I literally just added value to my house now because I've got a brand new roof. And so allowing companies to have more flexibility with scheduling gives you an opportunity to get that deal done on the 25-year-old roof. I'd still recommend they look at, replacing it, because if there is a storm, they're not going to be able to replace it with the policy. The policy is going to limit how much is paid out, but it doesn't kill a deal like it used to, which I think is really important. We have more flexibility and more options than we've had.
Well, and it allows to, I've seen these a lot the last probably 6 months of, hey, the homeowner plans to replace the roof, but obviously they're not going to even begin that process until they own the property. So we have ways now to say, hey, here's a signed contract that the homeowner is going to work on that roof replacement. We're going to have to deal with logistics and delivery issues. So we can put these different endorsements in that will allow a closing to occur. And then somebody, if it's through escrow or whatever kind of agreement they came up with, funds are being applied to putting a new roof on, and you just fix it right after that, which is good. So I see a question that says, what are some safety and wind mitigation features that can be added to obtain discounts? So other than just putting a new roof on, when it comes to the roof, that's generally going to be the big one. There is a company, I kind of joke and say, I think they fixed everybody in town, but you still see it every once in a while. It's called Maximum Solutions. And this is the way that the truss of the roof is actually attached to the side of the house. Without getting too technical, the number of nails that are used or the spacing, that blocking that's been done. That's a tool that you're going to find this probably on older homes, but can save significant amount of money. I've seen an $800 process save $2,000 in insurance. Nothing from, I've had questions before about with these new floodgates and things, how does that affect the flood insurance policies? I think that's conversations that those carriers are having, particularly FEMA, about what can be added to the policy. So, hey, I'm doing things to mitigate future loss. How can you help support my cost? That's not in policies yet, but there are chatter on that. Windows, are a big thing when it comes to hurricane protection, another mitigation factor. always nice discount to be added into the policy. I don't know if I would replace perfectly fine windows with impact or hurricane protection, but as they start to get older or you're looking for investment in your property, I think that's always a good one to consider. So, do you have companies who insure the roof? It was changed with by owner's permit. Oh, so yeah, you see this every once in a while, like 2005. The question's talking about a roof is being replaced, but you can't find a permit anywhere. I would say maybe you guys have an exact experiences you can share with me, but that's going to be more like 2005, 2006, that they were just kind of like, hey, if somebody can fix your roof, get on and get out. You can normally track down through the grapevine. You can find some data on that. We do have companies that will work with us, especially on a 4-point. If the 4-point inspection's giving certain ages left.
I think the key would be if Dwight does an inspection, Nate, he's got to, somebody's got to sign off that roof's been replaced, right? In order for us
Yeah, that'd probably be the big one. Hey, they're going to sign off on it, or we feel from his experience that there's X amount of years left on this that will allow us to do. It's pretty rare to see it. I'm trying to even think through Irma, through Ian, with the way the county is right now. Both Lee and Collier, there's going to be a permit somewhere, so it just might not be posted, but we can get our hands on it. So,
yeah, if you've got a permit, Maria, then it shouldn't be an issue. You don't have to use it. You can pull your own permit. My dad did that years ago. Yeah, as long as there's a permit, then I think that's the issue when there's no permit. Parker has a really good question, and this is one of the things that we really try to educate on constantly, is the fact that we're an Allstate agency, and Allstate is very, very, I was just telling our team this, but Allstate gets a little piece of every policy we write. And so Allstate has every incentive to let us write with as many companies as they can. But the reason they don't is exactly what you're asking, is the fact that they do not want us to write with brand new companies. I mean, you should see some of these companies' financials. They've got $20 million, $20 million. I mean, you've got customers that are buying houses that could be $20 million, or maybe not 20, but they've got more money than the insurance company. So Allstate's very strict on the companies we write through. The financials, that's a big deal. We're not writing with brand new companies, unproven companies, companies that don't buy enough reinsurance, et cetera. We did have a company, though, after Ian, United Property and Casualty, which was actually a public company and a big company. They just got crushed with Ian. They got crushed with Ian, which was the worst storm we've ever seen. And then they made the mistake of fighting a lot of the claims, and they got sued into oblivion. And so they did end up going into receivership, and it was a tough thing. Now the good news was they were picked up. The state made a deal with Slide to allow them to be absorbed, and that helped a lot with the customer fallout, et cetera. But anytime a company goes into receivership, it is a disaster for the customer. And we have one of our team members actually who was with United who had to go through that, and you nailed it. Cheap insurance. And that's what we're going to educate people on, is it's like, look, here's the lowest price. Here's what I would do. Because I can tell you right now, I don't have the lowest price insurance on my house. I want a good price, but I definitely don't want the lowest price.
Yeah, you nailed it, Kevin. I think working with quality companies and giving options with inside of the policy of, hey, and unfortunately you guys have run into it too in your world, this is what everybody else is going to do. They're just going to give you this, $2,000 quote, but per our conversation, review, and listening to what you thought was important, you really should take this $2,600 quote for those following reasons. So, you hear horror stories. After Ian, we were the first agency to open back up in Southwest Florida, at least from an Allstate perspective. And the amount of clients that were coming in because they heard we were open to ask for help that weren't our clients was unreal. And they weren't with our carriers. They just needed help. So, to have companies that are setting up insurance villages after these catastrophic losses, that are handing out checks. I literally told people, we've had people come from Sanibel, their shoes were still wet. They literally were leaving prints on the floor in our agency, getting a check printed from the back of the office, handed to them so they could get things going again. We take a lot of pride into who Allstate approves us to work with. I'll kind of double down and say that even Easton Greenwell puts our own spin on that as well, and saying, hey, we have these 16 carriers, but based on 12 years of experience, here's the best, and here's a good option even within that.
Well, and
So
I was talking to Parker earlier in the week before this meeting, and he was talking about, obviously a lot of your clients, interest rates don't matter to them. I mean, we all are hoping interest rates come down, but a lot of these clients are more concerned about the stability in the world, et cetera. And I would say that, we're going to talk to those clients and educate them on, hey, here's what you could pay, but here's why you may not want to do that. And I think that's so important because, these are not the type of customers necessarily that want the least insurance, want the lowest price insurance. Some don't care. Some, hey, I'll take a 10% deductible. But I'll never forget, I talked to the CEO of Bank of America, the former CEO of Bank of America. He was the CEO during the financial crisis, and he bought in Bonita Bay, and he wanted good insurance. I mean, the guy is worth, tens, if not hundreds of millions, and he wanted good insurance. He was willing to take high deductibles, but he was very concerned about the company and the coverage and the details, not, and you guys deal with those types of clients as well. So.
yeah, 100%. Yeah, Parker nailed it. The goal for all of us involved is to not only have that first sale happen, but have that repeat offender, have somebody that valued the experience so much that when their friends move to the community, they're referring you. When they're looking to upgrade from the condo to the house or from the house to the condo, they're not considering anybody else. They just go right back to the source. So. You guys are taking it easy on us. What else you got?
I can't be the only one. Somebody's got to have.
Normally we play Stump the Insurance Agent, where people ask us like impossible to answer questions and make us look low IQ, which is not that difficult.
What
and
is
two, I got a handout that will. Go ahead, Parker.
Maybe you can you explain what is Citizens Property Insurance Corporation? What is that?
Yeah, I'll start. Kevin, you can fill in if you want. Citizens is the state-run insurance company. It's never intended to be really a first-line option. It's supposed to be the opportunity to say, hey, we can't get the admitted carrier, which is going to be kind of the household Florida names to play the game. We can't get the excess and surplus marketplace to help us out. That might be based on locations or risk or ages. Citizen steps in to be able to offer mortgage-backed insurance options. It's super restrictive. I mentioned earlier, we're having carriers that are bringing coverages in. Citizens is always going to look for a way to take coverages out or put limitations. They're going to limit water. They're going to limit your liability. They're not going to do this. They're not going to do that. But it allows an individual that, especially if they're going to have a mortgage-backed purchase, to buy an approved policy to be covered. So they say it in the news. I parrot it. Insurance is kind of the insurer of last resort. It's where you want to go to last. An opportunity. It exploded in the last 2 or 3 years just because of the game that was getting played. There wasn't enough players to be in, and Citizens was taking on risk upon risk after risk. I think at one point they got over to be $1 billion of rate, which is they do not want to be. They want to be half of that, and that's why you may have heard or you hear in the news or you may have friends that were with Citizens and they're getting depopulized, meaning Citizens going to these carriers inside of Florida saying, hey, we got this risk and we're asking you to take 10% of it. And they're going to spread that out amongst the actual insurance.
Another really good thing that's happening is exactly that, because the taxpayers are ultimately on the hook for Citizens. Citizens doesn't collect enough premium. DeSantis has said multiple times that Citizens is underfunded. And so if there was a major storm, and Citizens had, the type of risk Nate was mentioning, luckily they don't now. That could result in, tax increases, assessments for taxpayers or Citizens policyholders. So the good news is, because the market's healthy now, Citizens is depopulating and shrinking. We still use them for people that we just can't find another option for, right? If there's just no other options, we go to Citizens. And the reason Citizens pricing sometimes can be competitive, it's because exactly what Nate said. They strip out coverage to keep the pricing lower, because ultimately it's political, and they won't allow citizens to charge the right rates. They always keep the rate lower than it should be. So they also have caps on what they'll insure. They'll only go up to 750,000 on the dwelling. Their liability limits are lower. So it's a watered down policy, but it's there for a last resort situation.
Parker, your question on kind of what's the value of having some inspections done prior to listing it? From an insurance aspect, the key areas I would say would allow you to look into, underwriters are going to be really picky on plumbing and water heaters. So it gives you an opportunity to figure out, unless you maybe have well, here's the invoice for the water heater, but it allows you to be able to show the potential buyer, hey, I got a great property. It allows you to see some of the things that might snag them up, the buyer in the insurance process. Allows you to address those right head on early on. I'm sure a homeowner would replace a 20-year-old water heater for $1,000 to make a deal faster than say, oh, I'm not going to do that. We'll just find the right buyer that's going to handle it on their end. So I just think it allows you to be more attractive when you're in a marketplace, especially as you get in communities where there's multiple listings. You almost have the polished pearl. It's like, hey, there's a bunch of us in here. We're all roughly at the same rate, but I don't have any problems with my property, and I can confirm that by showing you these things.
The other thing too, Parker, and you deal with this more than we do, but like when somebody does their own inspection, when they've entered a purchase agreement and they find things that are issues, then they start picking it apart. They start beating you up on, the price and those types of things. Whereas if you can take that off the table and make sure you've got all those issues addressed, maybe that preserves the seller's price point better than if somebody's coming in and beating them up over the water heater and this, that, and the other thing, and now they want to discount on the purchase.
Yeah, great point. This is the easiest I've ever had it. I'm just saying, you guys are kind of soft. Well, I will hang out and count, see if anything else comes through. But yeah, hopefully, I gave Parker a handout. He can email out to you guys. Our phone numbers are on there. I invite all of you guys to coffee. I'm happy to meet up with you around your schedule. We can do it closer to 5 and call it coffee too if you want. But yeah, we can talk about individual issues that you're running into. Talk about how you can come alongside you, partner with you, make you guys look good. We've been here for 12 years doing it in Southwest Florida. We look forward to doing it for another 20 some. So,
and Nate mentioned something before everybody got on about we're going to work on something from the technology perspective to where maybe you can go right into your app that you use and feed information straight to us. Put the customer's info, the address, maybe some details. We're working through that, and we'll get back in touch with you. Maybe that speeds the process up. If it's a Saturday or something, and you get that information to us, and then we're able to kind of jump right on it when we get back to the office. So we're working through that. Anything we can do to make your life easier, that's the goal.
Yep. Yeah, we're opening a text line system now for you guys, so you can just text right to it. Obviously, that's the way of the future. Keeping it easy while you're sitting in the middle of a listing, you can drop us a quick text. Somebody will jump on it and get you your answers you're looking for. Be helpful for you any way we can. So, Matt, I'm counting on you. You normally have good questions. You got nothing today? He's got nothing.
I got nothing today this morning. I'm so sorry, Nate. Nothing.
No, it's all right. It's all right. I won't be disappointed.
But I do like the aspect, like if there's on your end technology that it's easier than maybe bothering you with a phone call and talking about details of a particular property. That sounds like a great tool about having particular questions on coverage or a particular property, what it qualifies for and whatnot. So
Awesome.
no questions. Sorry.
It's all right. Next time. Maria, were we able to help you with your questions you had on some of your roofing issues with the permits? Parker, I don't know if you're talking to us, but we can't hear you.
There you go.
There we
So, no, thanks a lot, guys. Appreciate that. And if nobody else has any questions or anything like that, I think we can call it a wrap. So, yeah, there you go. Easton Greenwell, they're in the preferred vendors. They're one of our, they're in Circle. It's there. All the information's right in front of you. So, there you go, guys. With that being said, I think we can call it a day.
Awesome. Well, thank you guys for including us, carving out some of your Friday morning. And yeah, let's get together soon individually. Look forward to meeting everybody and helping you out.
Yeah, we
Thank
appreciate
you,
it.
Nate.
Really
Thank you,
appreciate
Greenie.
it. Yeah, absolutely.
Bye, guys. All right. Happy selling
Have a good
and
one, man.
have a good day.
See you guys.
Bye bye.
Yeah, let's do some closings.